if you only have 100,000, you might not even be able to buy a property with just 100,000. So real estate investing with Alexis, episode 3. What type of financing is available to purchase a fix and flip property? So there's mainly 3 different ways that investors buy these type of properties. 1 is cash, 2, other people's cash, and 3, hard money loans. So with these type of properties, they are beat up properties where you cannot get your traditional financing. So what people do is they use their own money, right? That's option 1. Number 2 is use other people's money. And number 3, which is the most common one, is hard money loans. So these are loans that are for investors that are in particular for fix and flip transactions. So you don't have to buy these properties cash. And I don't suggest buying it cash because for hard money loans, you do need to put a down payment. But let's just say you have 100,000. With the 100,000, you might be able to buy 2 properties, depending on the purchase price, of course. And if you only have 100,000, you might not even be able to buy a property with just 100,000. So you can leverage your money. So how does hard money loans work? So hard money loans is basically every bank is different, and they consider the main thing they're going to consider, because these are not your traditional financing. They're not really going to care too much about, they don't care about what your income is. What they do care is your credit score. They do want someone that has good credit score. But again, if your credit score is really bad, they might not care. They do care about your assets, your money. And then the most important thing they care about is the actual deal. Is it a good deal? What is the ARV? What is the purchase price? What is the rehab cost? They want to make sure that the numbers make sense on that particular deal for them to finance it. For example, most lenders, the max they will fund is 70% of the ARV. They will not fund past that. So if the ARV is $1 million, they're going to max you out at $700,000. Now, it also matters your experience as an investor. Some lenders will not touch new investors. They want you to have at least like 2 transactions or 3 flips within the last year or 2 years. Then you're going to be considered more like a seasonal investor. Then they'll be willing to let you borrow money. Now, every lender is different, but the best numbers I've seen is 10% down. So you have to put 10% down. They'll fund 90% of the purchase price, and they will even fund 100% of the rehab. So whatever the construction is, they'll fund that. Now, they are going to fund it in payments, so in draws. So the way it works, let's say that it's 100,000 of the rehab, they're not just going to give you 100,000. So what you have to do is, it's in stages. Let's say, for example, you do the demo, you pay with your own money, and then they're going to reimburse you the demo. So you do it in stages. That's how it works. They do it in draws. Again, they'll give you 90% of the purchase price, 100% of the rehab, but it cannot be more than 70% of the ARV. Super important to notate that. So now, really good. You can leverage your money. Like I said, let's say you want to buy a house that's $300,000. You put 10% down. That's only 30 grand, right? And they'll fund the remaining. And then the construction, they'll fund it. You have to cover it, and then they'll give you the money back. Really, really good. Now, but when you buy these properties, the downfall is that there is going to be holding costs, right? Because you do have to do monthly payments to these loans, and they are interest only. If you buy cash, there's no holding cost. With these, there is a holding cost. Now, normally they're around 10 to 12% interest. And the origination, they do charge points to obtain it around 2%. So 2% of fees. So if they lend you $500,000, you're gonna have to pay $10,000 for origination, and your interest will be around 10 to 12%. But again, if you make the numbers, it makes so much more sense to go with the hard money loan, because yes, it's gonna cost you a bit more cost, right? But you can leverage your money, and you might be able to get 1 or 2 more properties going with the hard money loans. So these are the different ways to get it. I always recommend go with hard money. I do originate these loans, so I could help. If you need to get a hard money loan, contact me. I'll get you the best rate and program out there.